Welcome back to another episode of Palisade Radio. This is your host, Colin Cattell. On the show with us today is returning guest to the program, E.B. Tucker. E.B. is, of course, the editor of KC Research. E.B., thanks for coming back and joining us on the show today.
Thanks for having me.
E.B., the HUI, which measures the 16 largest gold mining companies listed in the U.S., has suffered some major damages the last 3 months. It's down about 20%. And this has been a trend for gold investors this year that if it's not sideways, it's a downward burn. I want to start off by asking you what your sentiment is on the sector. Obviously hasn't been a very shining year for resource investors.
No, it hasn't been. It might shock a lot of people listening because I think I'm well known as a pretty adamant gold bug, but mining stocks are bad investments. They're kind of capital. They need capital all the time. They're digging holes in the ground and sometimes finding nothing down there. They run into all kinds of operational problems. And, again, that might take people by surprise from a guy that's made most of his career kind of in this business. But when the gold and silver price moves, they are some of the most exciting investments possible. I'll never forget when I first got into this business. It's probably the 2005-06 rally in the miners, and I made money in spite of myself. I mean, I remember buying some gold stocks on a tip from a friend and doubling my money and thinking I was the smartest guy around. And it kind of put me on this path to figure out, how does this all work? And of course, there's been so many ups and downs, but the thing people kind of need to understand is that these are cyclical stocks, and the time you want to own them is in the part of the cycle where they're moving higher. And I think next year really is going to be one of those years where they are going to leave the average investment in people's portfolio in the dust. And most people don't have any exposure to this sector.
I'm going to ask you later in the interview about what you see coming for next year. But before that, we've had several comments from listeners on the show stating how refreshing it is that our channels don't bash other market sectors, but instead embrace them as kind of a nice supplement to the portfolio. And I think 2017 has been a great year to demonstrate that. While maintaining a core holding in the mining stocks makes a lot of sense, having just a bit of exposure to other sectors, say in Canada right now, like cannabis or blockchain, you can really keep the portfolio in the green and continue to add positions to the junior mining portfolio. What are your thoughts on that?
Definitely. I mean, I'll never forget when I was, coming of age as an investor, and my grandfather, who was my mentor, he had a basket of stocks, like the Pfizer type stocks in the U.S., Merck, these types of things, Exxon. And I said to him, God, this is so boring. Why would you own this? And he was like, son, you're going to one day see that there's nothing wrong with having a little piece of your portfolio in good, solid, long-term American business. And the same goes for Canadian. And so, you just have to be insane to have 100% of your assets geared at any different sector. Doug and I are writing about this all the time in the KC report, that you've got to build your own financial empire, and it's not really very hard to do. If you were going to build a real empire in life, you would have assets that generate income. You would have assets that you wanted to own through the worst of situations, and then you would have assets that are of more speculative nature. And those are the assets where you're going to get real capital appreciation that's going to build wealth. I mean, the portion of your portfolio where you invest 10% trying to make 100 is the part that we spend a lot of time focusing on when you and I talk, and it's certainly the most exciting part. But you've got to have exposure to other things. Like, look at the cannabis market. I mean, when this year everything changed when Canopy took an investment from Constellation, and what that means. I think a lot of investors miss that, but Constellation bought 10% of Canopy, and in my view, it's sanctioned institutional investment in the marijuana sector, and that is a huge change of the tide. You've seen recently last week, Afria, another big company that we've profiled before in the KC report, actually up maybe 75% since we wrote about it, but they've got a deal to sell through existing Canadian channels, online, And so you're just, every single week, it feels like you're seeing this business become legitimized. It's a huge business. And so to your point, having exposure to something like an emerging trend like that it can really do you a lot of favors when another sector that you're in has a tough year.
EB, worth pointing out is the fact that many commodities this year are in fact in a bull market. Obvious ones to point to are things like cobalt, lithium, vanadium, copper certainly demonstrating a bull market pattern, palladium, one of the best performing commodities of the year. And one could make the case quite strongly that gold, despite posting lackluster returns, is showing a bull market forming. Do you find the case even more compelling for these resource stocks when looking at the underlying commodity performance?
Definitely. And so people, this month's Casey report is going to be all about getting the big picture right. We're going to make predictions for 2018. And one of the things that I'm harping on for pages is that you've got to understand where things are headed from a more macro perspective. Let me give you an example. If the gold price is headed down, like in 2012, you could have spent a year doing due diligence on your favorite gold stock, and you could have picked the best gold stock, and it only went down 50% compared to 80% for other stocks. And so the point is that you've got to catch that bigger picture trend right. There's two things that I want to highlight with respect to this comment. One is that gold has had a lot better year than people realize. It's made higher lows all year. Its chart is bottom left to top right. I think it's up, 10, 14%, somewhere in there, low double digits, which is a pretty good year, especially for an asset that is weighted, as safely as gold is weighted in the portfolio. It's making no headlines. It's all about Bitcoin this year. And Bitcoin and gold are completely different assets. And I think one is, Bitcoin is perceived as kind of the millennial gold. Maybe it is, maybe it isn't. It doesn't really matter. But gold itself, it's good enough for 6,000 years of kings. I mean, it should be good enough for us now. And people are going to probably start worrying a little bit more about who's on the other side of contracts. Counterparty risk, as they say in the business, is going to become a little bit more of something people are concerned about next year. And that's when gold really shines. I mean, if Bitcoin had a 25% fall, I think you would really start seeing people take a look at why gold is as valuable as it is. So that's one part. The second thing is, one thing that people are definitely missing is that the dollar, in my opinion, has re-entered a long-term downtrend. And this is, again, something that we're writing about extensively. Everybody thought that Trump's tax plan would create some sort of repatriation of foreign income, which would send the dollar into a whole new uptrend. And guess what? That really hasn't happened. And also the repatriation hasn't happened. So, I mean, so you had this kind of hype. There was buying on this hype, and then the event didn't happen. And then the dollar's not breaking out to new highs. And so I think if you and I do this same call 1 year from now, what we're going to see is that the dollar had re-entered a downtrend and no one noticed. Everyone was distracted by kind of the memory of what's just happened. So that is positive for commodities. And if you look around, all these commodities that you just mentioned, copper, all the smaller, lesser commodities, they've all quietly entered new uptrends. And so it's not really about copper per se or nickel per se. It's about a big reflation trade. And that big reflation trade is the big picture trend that it's really important that investors look. Now, once you get involved in that, you can pick different sectors based on changing economics in different sectors. You can focus on different things that make sense, but you've got to get that bigger picture right first.
EB, looking at mining stocks right now, how cheap are they? Well, one metric that is important is relative performance. So mining stocks are almost as cheap as they were back in December of 2015 if you compare them to the elevated valuations of the Dow and S&P. So the Dow since that time is up 41%. And I look at where mining stocks are. Do you feel that the valuations are almost as low as they were then?
They are, if not lower. I mean, it's really a case of nobody cares. So the reason why you and I are doing this call today is a company that I'm on the board of directors of called Metallo Royalty and Streaming, which most of the listeners have heard of. And today we announced that we would start our dividend program. So So just as an example of how cheap stocks are, Metalla trades at about 6.5 times operating cash flow. The monthly dividend program starts at 1/10 of a penny Canadian per month, which is about 2% on yesterday's or last week's closing price. And there's a stock that's returning capital to shareholders. We've publicly stated that we intend to pay 50% of operating cash flow in the form of monthly dividends. That you'll see that number move up with the price of metals and with the number of deals that we can kind of accretive deals that we can bring in with the company. So here's a company that's up 100% in the last year, that's paying money back to shareholders, that's cut 6 deals and bought 18 royalty assets. And Colin, nobody cares. So that's what you want to look for, because compare that with the latest, ICO coin offering or something of some cryptographic currency that you've never heard of, some obscure thing, and people are kind of lining up to take risk without even looking at the underlying fundamentals. So that's how you know something is cheap, when you're literally paying shareholders the profits of the company and people say, no, we don't care about that.
For sure. Metalla is a rare case, obviously, and congrats to you and the whole team on getting this dividend together. I know it's been a long-term plan. Yeah, and
that's right.
Metalla, of course, is cash flow positive by nature of the business being in royalty and streaming, and Brett's ability to put these deals together in a bad market. But I mean, looking outside of the realm of something like Metalla, the valuations are just so cheap, and like you said, it seems like nobody cares. It doesn't matter if you're hitting proper drill results. I'm seeing drill holes coming out that would normally drive stocks up 50, 100, 150%, and nothing's moving. It's just a very unusual and disheartening situation for us resource investors.
So, Colin, I was in London 2 weeks ago for Minds and Money, and we had meetings in the city all week. We were with a lot of guys in this business, and the biggest story this year is the Golden Triangle. And you got Garibaldi and Metallus and all these companies up there that have hit fantastic results. And there are other companies that the listeners haven't heard of that are adjacent to these companies. And I talked to those companies, and they had fantastic results. And so it's really strange, because most years, as you're saying correctly, those stocks would be up 20-fold based on they've found what is potentially setting up to be real economic mineable deposits. And they've gotten a little bit of attention. I mean, early shareholders there have made some money, but nothing like what you would think. If you go back to 2011, people were saying, hey, we're going to go look for gold in the middle of the Yukon, and they'd float 20 million in an equity offering right away. When now the gold is right there, pretty close to civilization, to power and roads and water and whatever, and mining friendly areas, and people aren't that interested. So that while that's difficult, it's also a sign of the times, and those are the times when you want to be investing. When it doesn't feel that good to invest, that's when you want to be investing. 2011, it felt great to invest. At PDAC 2011, you couldn't rent a hotel room within miles of the city. So those are the times we need to be a little more worried. Okay, so these days you've got companies doing the right thing, that are spending money wisely. They're finding stuff. They're working on these drill plans, and they're being prudent with the way they're spending money, and they're not getting attention. That's a good sign for investors. As hard as it is to stomach, it's actually positive.
EB, if I remember back to 2006, 2007, I can recall the frenzy. A company would announce a financing, and people would skip critical questions like, who is the management, what's happening on the ground, what are the grades like, and they would instead ask the question, to themselves at least, what will the gains be like after my 4-month hold comes off? And I'm seeing that same type of line of reasoning for both the cannabis space, which you already talked about, but also the blockchain space. So I want to ask you, what's your feeling on the public company side of these blockchain companies that are now coming to the market?
So I've got shares in Hive blockchain. I've met with Marco Strong, the founder. Is really, really interesting, very nice guy, brilliant guy, and I talked to him about what they were doing, putting Hive together. And these guys they're pros. I mean, they understand the business. They've got 9, I think it's going to be closer to a dozen total data centers by the time they're done with the current build out. They know what they're doing. They're well financed. In 2016, they did $500,000 in mining, Bitcoin mining revenue. They spent half a billion, sorry, on mining revenue. They spent $200 million in capex assembling these data centers. These guys are real pros. So there are a lot of other guys out there that aren't pros. They changed the name of their company to something blockchain, and have successfully changed the ticker symbol and are raising money. And it doesn't mean that they're not authentic. I mean, they are in that business, but they're not a kind of an original player in that business. And so shareholders you can still make money in a frenzy, even when the underlying company is not that great. Think back to that 2006, 5-6 rally in the gold stocks. I mean, there were companies that 2 years later looked like they were completely trash, and they went up. They went up like crazy. So I think investors need to take a serious look if they have gains in these blockchain related companies. They need to, once you have gains there, take a serious look at those companies and say, do I want to own this if there's a brief pause? I mean, look at the Bitcoin chart. You know, it's literally straight up, which is great for people that own Bitcoin and people that own stocks. I mean, Hive is up, 10 times off the first placement, maybe 11 times off the first placement. And since the start of trading, it came out at 75 cents. It's like 3.50 today. So, I mean, even average people not in the placement had a great chance to make lots of money in this. And it's the time to look at these things and say, do I feel comfortable with, see, management earns its keep on the downside. It's really easy to make money when things are in a frenzy, but great management earns its keep when things are not so great. And if you can determine if those stocks you have gains in have high quality management, you can take some profits and hold them. And if they have low quality management, then you've got a chance to book a profit and to move into a higher quality name, or to pull some of that profit off the table and put it into a sector that's not done so well.
EB, let's back up and talk a little bit more on the macro picture on blockchain. And Jim Rickards, who you know well, has been a detractor of the space. I think some of his claims are a bit outside the box, but he's made one good point that I saw, and that's the case that if cryptocurrencies were moving up in response to the fact that fiat currencies were getting more worthless, then you wouldn't have cryptos gaining against everything. Something like gold or even another currency outside the dollar would go up. So he's saying that, look, whatever the case is, there's obviously some type of bubble going on. Are you worried about that in the short term?
Yes. I know that a lot of people are going to get hurt badly at some point in cryptocurrencies. There's people, it's really difficult to kind of have a discussion with people that are involved in this space because there's a bit of a kind of a religion to owning it. People will say things to me like, this is going to be the end of the banking system, and we've taken back the power from the government with money, and this is really delusional, right? So I don't like the government any more than you do or the next guy listening to this show, but the government has a special power that gives it control of the economy, and it's called the ability to designate what is legal tender. And it's a very important term. It's a very important legal term. And legal tender is whatever the government declares it to be. And you have to use legal tender to pay your tax bill. So you can't pay your taxes with cryptocurrency. You can't pay it with oil or gold or any of this. Even though gold is actually still legal tender, by the way, it's kind of controversial, but you can't use it to pay your mortgage. And so you have to ultimately convert that cryptocurrency into something else in order to pay bills. Now, maybe the guy at the coffee shop down the street will take BitPay and will take some Bitcoin for your coffee, which I think is great, by the way. But as an asset class, I think people have fooled themselves and believe that Bitcoin is something that it's not, and especially these lesser coins. There's Pizza Coin and Trump Coin, and there's all these. If you go on Crypto Compare or any of these sites, there's just really incredible coins on there, and people are buying these things. You should read the message boards. They've made more money than they know what to do with on these things. And another problem, Colin, is that I don't think people are paying tax on these gains. So if you had a huge gain in Ethereum and then you sell it and you buy some other coins, that's something you definitely owe tax on. And everybody's kind of thinking, well, this is the government's lost power. But I can assure you that the government has not lost power. As much as we don't like them, I doubt that they'll yield power without a fight. And that's not a fight that you want to be on the wrong side of. And so I think people need to be very realistic about their holdings. There's nothing wrong with owning some cryptocurrency. I think the Ethereum, the science behind Ethereum is going to be something that will revolutionize our financial life, period. It is absolutely amazing. It eliminates counterparty risk. You get rid of centralized clearing agencies. I think fast forward 10 years and we'll see this all throughout our life. I mean, if it was 1996 and we were doing this interview and I told you, look, I don't know how to tell you how the IP protocol works, okay? But what I can tell you is 20 years from now, you will not be driving to Blockbuster to return a video. You will not be ordering, getting a book from Barnes & Noble. You'll be doing all this online. In fact, you'll do virtually everything online. That is what you should see with cryptocurrencies today. I don't know what the value of Riot Coin will be 20 years from now. It'll probably be zero. But I can tell you that when you buy a stock, it won't take 2 or 3 days to clear. It'll clear instantly on a blockchain. When you buy a piece of property, which has a unique parcel ID already, that piece of property will be transacted on a blockchain, because the whole reason why property has a unique parcel ID is so people can attach liens to it. And that's why you have to pay a title agent to buy property so they can do a title search and all these things. It's absolutely made for the blockchain. So you'll radically reduce the cost of transacting property and other financial assets. And this will all be because of blockchain, but it probably will not be because of Pizza Coin.
Good point. Well, summing up here, let's wrap back to Metalla Royalty and streaming. You are, of course, a director, and Brett Heath, who's a brilliant guy, is director and CEO. Doug Casey, founder of Casey Research, of course, major investor in the company. And once again, great work on getting the dividend program going. Evie, let me posture a question around this. If nothing matters right now, like you said with the gold stocks, and nobody cares, do you see a reason in picking the cream of the crop like Metalla as opposed to just throwing money in anything? And I'll kind of insert my opinion that I certainly do, but want to get your opinion on that.
So the reason to own Metalla is the company in 1 year cut 6 deals and amassed maybe 6.5 million in Canadian in revenue from zero. They bought 18 assets. I mean, this is all Brett's work. Okay, so Brett is an incredible deal maker, and he's been a friend of mine for a long time. I helped him put Metalla together, helped him do the capital raises, and I'm so happy to be on the board supporting him and helping him build the company. The reason why you own Metalla is not just to start collecting a monthly dividend, which monthly cash flow is actually one of the best things to have in your financial life. I mean, I have rental property that I just can't imagine selling the rental property because it's like Christmas morning every first of the month. So that's what we want Metalla to be like for people. We want Metalla to be real ownership and monthly cash flow from precious metals investing, and not in mining. This is a much better business than mining. This is a finance business, and this is the only stock that I know of that you can buy where you have real tangible exposure. The silver price goes up, your dividend goes up. So this is tied to that. But the reason why you should look at Metalla stock today is because it trades at 6.5 times operating cash flow, where Franco-Nevada trades at 24 times operating cash flow. And that's a big gap, and that gap will slowly close as Brett continues to do what he's great at doing, which is to cut accretive deals in the gold and silver sector, the royalties and streams that add value to existing shareholders. You're not going to see the company cut a copper deal. You're not going to see it buy a lithium asset. It's only gold and silver deals, and it's only deals within certain size parameters, and it's always going to pay out 50% of its operating cash flow. as that goes up or down. So I think it's great to own mining stocks. I mean, it's great to have exposure in mining stocks right now. It's tax selling season. You can get a lot of great deals right now. It's definitely the time to add to positions. But Metalla is a very serious company. It doesn't need to go out and put a hole in the ground and find a big deposit of gold. Metalla does zero exploration. It does zero project development. It is 100% a finance company. So we have a deal maker, we have lawyers, we have a CFO, we have a very small office. Royalty and stream companies typically generate a couple $1 million per employee in worth of revenue, right? Whereas a mining company can be as low as $100,000 to $200,000, or even worse for the smaller guys, zero revenue per employee. So it's a very different stock to own. I think that what you'll see going forward, depending on how the market, you never know what the overall market's going to look like, but a softer gold and silver market is great for putting money to work in the royalty and streaming space. Now, if the market stays soft for another 4 or 5 quarters, I think Brett is going to be a very happy man, because then as the price starts to move higher, the company's income is tied to the price of gold and silver, because these are fixed contracts, to buy gold and silver for the life of the mine. In each case, it's different, but you can obviously see all that doing due diligence. And so I think in time people will see the benefits. I mean, Brett and I have been in this business, as you know, a long time. We've been in the business together. We've been money managers in the business. I've written newsletters for years, covering the topic, so we know. I'm not going to say everything there is to know about the mining business, but we know a lot about it, and we definitely know that being a shareholder in an operating company is difficult, whereas owning royalties and streams that you buy at an advantageous price is the most surefire way that we know of to generate income from gold and silver. And in this case, regular people can buy stock in the company. All the other royalty and streaming companies were formed by spin-out. Metalla is a company that anybody with a brokerage account can buy stock in, and that makes it very, very unique. Franco came out day one in the market, already had a high valuation. All these companies, most of them were formed by spin out. And this is a company that average people can buy. They can have monthly income from gold and silver, and they can be as involved as they want to be following the company's success. And we're going to continue to do what we did this year.
E.B., on that note, thanks so much for coming back on the program. Look forward to getting you back in the new year. You said that 2018 should be an interesting year for the commodity stocks. I happen to agree, but that might be wishful thinking, so hopefully I'm right, and we'll see what plays out next year.
People should look, Colin, for rotation. I think you have me back to see if we were right or not. It's always fun to do that. I welcome the report card, but I think we'll see some rotation out of things that were popular this year that might not be so popular next year, and we could have a lot to celebrate later on in the first quarter.
Think you understand the junior mining sector, and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip your face off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?